Hello everybody, my name is Nicole and I'm a technical analyst and private investor. And I'm sure you'll be well aware that over the last week there's been an absolute media frenzy, particularly by the conventional media, as to what's been going on social media and to what extent this has influenced movements in US share prices. It's very much a US-based issue. I don't know where conventional media has been, but using social media to not collude or anything like that, but just swap trading ideas is endemic and has been for at least a decade. Do you remember LIBOR? All these people with their chats on Bloomberg terminals and Reuters terminals and private telephones and all the rest of it? Well, there you go. Anyway, this one has been made out to be a sort of David and Goliath type story. We'll see. But it has created a lot more volatility last week. And so I'm going to focus in on price action of the S&P index. I don't follow these penny stocks. I really don't. That's not my thing. But anyway, the S&P index I'm going to focus in on and its performance over the last week and a couple of days now. So my first chart is a daily one of the S&P 500 index itself, not a futures, not a mini futures, not any derivatives of anything like that, and definitely not an ETF. So here we have a daily chart with Ichimoku cloud system on it, and you can see that at the moment all signs are that we're still moving higher, albeit quite slowly, but since January we have moved a bit higher. And in fact, we hit a record high at 3870 on Tuesday. But already before that, there were a couple of little warning signs. The previous week, Thursday and Friday, had two tiny little doji candles. These denote indecision. Monday didn't start off terribly well with a hanging man candle where you start at the top, have a sudden drop and then sort of scramble your way back up again. Tuesday's the record high, but then we gapped lower into Wednesday with a fairly large daily down day. Thursday was a shooting star, and Friday we closed at the low of the week, under the two moving averages, which are very, very close together, and so the chance of them crossing to bearish is increased. But at the moment, I wouldn't say that there's too much to worry about. Note also that the historical volatility, this is nothing to do with VIX, this is historical volatility, or more than doubled last week. So, it does denote a complete change of tone from what we had seen in November and the first 3 weeks in January. Now, my second chart, I'm moving up a time frame. I'm doing this deliberately today because I want you to see how you look at the different charts in different ways with different analysis on it and see if you get a confluence of ideas. There's never any one thing that makes you decide to buy or sell. So this is a weekly candlestick chart with a 50 and 200-day moving average. And last week is that red one, which is a bearish engulfing candle. But that's already that earlier on we had a hanging man on the weekly candles as well. We've also closed just a smidgen below the 50-day moving average on Friday, but now we've bounced from that. Look at the RSI, Relative Strength Index, that is diverging. That is not a bullish sign. My third and final chart is a monthly one. And you can see we've been working in a massive, never-ending potential broadening top since the beginning of 2018. And what we saw last month, was a shooting star above the top. Do be careful. It's unsteady, uncertain. There's hesitation, fear, and potentially exhaustion at these levels. Keep a close eye.